No stranger to economic volatility. He started Bridgewater Associates at the end of the 1970s bear market. Then he dealt with the dot-com boom and bust and the 2008 financial crisis. His firm manages around $150 billion. He's also the author of a new book, Principles for Dealing with the Changing World Order. Ray joined me in the C-suite in the sky, and I asked him if this week's volatility is here to stay.
Get used to it. I mean, it's like, even that question is almost like, you haven't been in a good bear market before, or you haven't been in, I mean...
Most people haven't.
Okay, well, history. Understanding the history and the mechanics of what it's like. Understanding when you produce a lot of money in debt, then how do you produce, then you have tighter money. Understanding what does it mean, tighter money. Understand the consequences of these things. You have to have a historical perspective, I think.
If somebody said to you, okay, we're clearly moving into a bear market, how long do you think it will last?
I think that the Fed's trade-off between inflation and growth, it always tries to see a balance. And there are some times when conditions are good, usually when there's not much debt, that trade-off is not difficult to run. We're entering a period of time where there's an great inflationary pressure due to the fact that you produce so much money and at the same time, they're trying to strike that balance of the tightening of monetary policy. So it looks to me like an environment like a stagflation kind of environment where both will be a particular challenge. So individuals have got to know, what does that mean? For example, interest rates and debt instruments that they're holding will not have a real return. They have that's adequate. In other words, not enough earnings to make compensate for inflation. Last year we had an inflation rate of about 8%. There's a zero earning. So if people start to think in terms of buying power and realize that cash instruments and debt instruments are going to be a challenge and try to diversify their portfolios, those would be the main headlines that I'd convey in terms of, don't just look at up and down in bull markets and bear markets. Look at diversification and be very particularly worried about whether the real returns that you're going to get on your cash or your bonds. I think too many people are not worried about that kind of environment. If you even study the 70s or other periods of time like that, that would be helpful.
Good morning, 6:59 a.m. Eastern Standard Time. I'm T-Speaker222 with Dogecoin and you. And I wanted to give you guys a quick early morning update on Ethereum. Because as you can see, like we talked about yesterday, if you guys are part of the live stream, or if you talked about on our update yesterday, we're going to try to see if we can continue to ride this bullish divergence here in the 30-minute and see if we can come up and try to back test way up here, either 2154 or, like you can see, we broke this we haven't broke it, but this is a bearish consolidation pattern. And right now we've forced ourselves into a support like that, resistance above. Now, I'm going to take this out and I'm going to show you guys a truer way to look at this so that we can actually see a real spot to hit, because this is where we actually have a chance to hit. That other part of the number, I highly doubt with any that we're going to hit up there. Now, if we can somehow break this, I think our top end potential right now is 2167, 2168. But if we can break this, then we can start layering out the 2199, and then you can start to maybe back test here, but that's a long ways up to get up there. So we'll see what happens, but I think it's more likely that that's what we're following right now. And if we break out of this, then we can continue to cover it further up. But as of right now, I think approximately 2178 area should be the top potential for Ethereum. And then there's one more I wanted to go over real quick at this early morning, because they're all looking to have this little bit of this little pickup like we talked about yesterday and the day before and the day before. That was my projected target of Matic, that we could come up back up here, but I didn't know if we could get up there. But now it looks like this uptrend's bringing us right back up to 79 cents. It's not a great uptrend, but until you break it, you can follow it just like that. We've been laboring a little bit at the end, but that's not to be unexpected, especially when this kind of stuff is happening. And then that's literally what we're looking at for Matic. If Matic can break out of this short-term ascending triangle, you know, then it can maybe retest to higher areas. The problem is like I said, you're not going to want to get caught in this. If you're in a swing trade, pay attention very closely, because the weekly is a bearish cross. So we only have so many days to get this right. It's Tuesday. We still have time. Make sure to hit that like button. I'll be back shortly.